Hey everyone, welcome back to my channel. It is Carla here with Benchmark Realty, your local realtor here in Clarksville, Tennessee. And today I have a special guest on again, Daniel Page with Castle Rock Mortgage here in Clarksville. He was on a while ago and I brought him back with the recent changes in our market. I wanted to have him on today to talk through all those things and some strategies for you guys to use. And welcome to the channel. Welcome back.
Yeah. I'm always happy to be here. I'm always honored when you ask me to come on. So definitely love it. But yeah, there's been a complete change since the last time I've been on here. So very good topic today. Very excited to kind of dive, a little deep on some of the strategies and some of the unique things you may be hearing in that market to maybe where I can clarify some of the things that you've been hearing buzzing around.
Yeah, so unless you've been under a rock, you that are watching probably know that interest rates have significantly increased in the past 6 months or so, when we were at historically low rates in the 2s and 3%. Now we've more than doubled that at this point at the end of 2022. And now we are trying to strategize and find tools and strategies that our buyers and sellers can utilize in the shifting market to help sell their house or market their house and help buyers save money on their payments and such. And one of the popular things that are going around right now are buy downs, and a big buzzword right now, 2-1 buy downs, 3-2-1 buy downs. So I was hoping that you could speak about that a little bit, Daniel.
Yeah. So, like you said, you've been living under a rock. Well, big shocker, rates are just not the same anymore. So we were due for an adjustment at some point. So unfortunately, there was no gradual increase. It hit the market pretty quick. So, as you stated, these buy downs, these temporary buy downs that you hear kind of people talking about, well, it was never really a thing because it wasn't needed at the time, right? With historic lows, it just, you got a phenomenal rate. You didn't have to really care so much about it. But now, obviously rates doubling, maybe tripling at some point. It becomes a little bit of a bigger topic. So the way a buy down works, it's a temporary buy down. Okay. So just understand things will change on you just a little bit, right? So I'll give you a great example. So let's say right now your original interest rate, nothing to it, is 7%. Okay, 7%, and let's just say we do a 2-1 buy down. Okay, the 2 is going to represent, hey, for your first year, okay, it's going to be 2% lower than your original rate. So if your original rate was 7%, your first year you're going to be paying on a mortgage that's at 5%. Okay, if you don't refinance, you make your 12 payments. The 2-1, we got the 2 figured out. The 1 means, hey, now your interest rate is going to go up 1. Okay, so now instead of the 5%, now the following year you're gonna be paying a 6%. You keep going, it doesn't change, and then at some point you're gonna go back to your 7%, and it's gonna be for the life of the loan. Same thing with a 3-2-1, same concept. Instead of a 7%, your first year is gonna be a 4%. After that first year, then it goes up to a 5%, following year 6%, until you make it back up to the 7%, and then it won't change after that.
And realistically, this is a benefit to the buyers that the sellers are contributing the money for this buy down of the rate temporarily. And this is advantageous for the buyer because how much are we talking on average? I mean, talking $20? We're talking hundreds of dollars a month? It's really going to kind of be dependent upon the loan amount and things like that. But, no, it's not going to just be a simple $20, $30 savings. I mean, we're talking going to the hundreds. So it definitely can be a very beneficial option for a buyer. But, there's always a twofold for it. A lot of people, especially the younger generation, talks to their parents from the older generation. They don't like their rates changing, like point blank period, right? So there is always that hesitant of, I want my rate fixed. I don't want to mess around with anything changing on me, right? So, but in these instances, as long as you're cool with the original note rate and you're okay with that, and you want to roll the dice and maybe see if you refinance before, while the rates are, when the rates drop,
then I think this is a very viable option because yeah, you do save quite a bit of money, especially in the first run of that of this program.
Right. So definitely I can see that being a great option for someone that if you know you're planning on only being in the house a few years, or you're expecting to PCS to another duplication in a few years, and you want to take advantage of that buy down option, and the seller is willing to contribute to that. That could be incredible.
Just again, in a nutshell, it will take some of that seller concessions to help out in those aspects. So yeah, again, stars got to align, the seller's got to be willing to play ball.
So that's a conversation that you and the buyer are going to want to have on the front end, communicate it to your realtor, and then me as the agent or whoever your agent is going to communicate that with the seller's agent to make sure everyone's on the same page with that buy down option, right?
Yes. Yep. 100%. Yep.
Gotcha.
Mm-hmm.
Yeah, makes sense. And can anyone do this buy down? Is it loan type specific?
I mean, no, you can pretty much do it with any loan product. You know, but it is one of those things like your lender has to offer it. It's not as simple as, hey, you know, I'm going to pull the trigger. I'm going to go with my preferred lender, because some lenders really just don't offer it. I would say most do right now, especially. But again, it will depend from lender to lender.
Can you explain the difference between buying discount points as the buyer versus doing the 2-1 buy down option?
Yeah, absolutely. So the thing is like a buy down is temporary. Okay, meaning it'll change on you depending on, you know, what your rate is. You do a 2-1 buy down, 3-2-1 buy down, a 1, you know, temporary buy down. It's all just going to be dependent upon, you know, how that's structured. But a permanent buy down or a permanent discount point or a discount point in general is essentially saying, hey, I don't like my 7%. What is it going to cost me to get to a 6.5% or maybe a 6% or something along those lines, right? And what's going to happen is you, as a buyer, you're going to come to the table with whatever that cost may be. So in layman's terms, when a lender says, hey, you got to pay a discount point, like let's just say, hey, they got to pay 1 discount point. Okay, well, you're financing $300,000, it's going to be 1% of your loan amount. So if I'm telling you, hey, Carla, look, I know you don't like the 7%, but you're feeling the 6.5%. It may cost you 1 discount point. You're going to have to bring $3,000 to the table in addition to your closing costs in order to keep that rate. The beauty of that, though, is it's not going to change on you like a temporary buy down will. It's fixed for the life of the loan unless you decide to refinance down the road.
Right. So that's a good point.
You know, the beauty about working with me is I don't just say, hey, here's your one option, right? I love to give multiple options. When I mean by multiple, I'm talking about maybe 2, maybe 3 top. I don't want to overwhelm you, but I'll always give you my personal opinion. I think discount points can be great as long as it makes sense, right? There's some people, no matter what you tell them, whether it's saying, hey, look, it's going to take you 5 years to recoup this money that you just spent, you know, on these discount points, they don't care. Some people said, hey, sign me up. I don't care about it. I just want this rate. Roger that. I'm here for that. Okay. I'm here for you. I can't do anything else besides do what you tell me to do. But you know, if it's not going to be too crazy out of pocket and maybe it saves you enough money to where it goes back to your comfortability that you've been looking for, and you can recoup that money within a certain time frame, I think it's a perfect option. But there are a lot of people where I really wish they wouldn't have did a discount point because it didn't make sense. Because if these rates do drop here next year, you've used all those funds to essentially buy down the cheapest rate or the best rate now, and then it's not going to be anything here in 6 months if you decide to refinance. So,
or Chris, we don't have crystal balls, but if the rate dropping in the next year or so, then it might be more beneficial to the buyer to save their cash and just wait till the opportunity arises to refinance that loan.
Yeah. But you know, I always get a counter for that. People are like saying, well, you know, obviously, what about if the rates don't drop? You're right, 100%, right? I mean, again, like you said, I can't make any promises. 100% can't make promises. But everything that we're seeing, everything that's trending towards that theory and that prediction of the rates dropping, everything's been aligning so far. And so, I mean, to be fair, again, we were just overdue for a correction. That's just why the rates are so, you know, that's why they're at with where they're at now. It was just overdue. The 2s and 3s I mean, good gracious, it was great, but we were just due for a correction. So, yeah, I advise a lot of people to possibly save your money. But again, if it's small enough to where it makes sense, sure, that's a pretty good concept and it's a good discussion. But I mean, if you're forking up, thousands and thousands of dollars to save like $60, I'd probably advise against it.
So
Yeah.
definitely, I mean, it's good to know that these buy down options and discount points are tools for buyers to use and
Mm-hmm.
over and see what, with your lender to see what makes most sense. So
Yep.
it's your specific situation. Another buzzword that I'm hearing a lot right now as a realtor is the loan assumption question. Loan
Yep.
assumptions are really hot right now, hot topic to talk about. And
Mm-hmm.
there are many pros and cons to this strategy. And I understand it's a very unique strategy
Yes.
to use. Can you speak to the loan assumption strategy?
Yeah. Yeah, absolutely. So, when you hear loan assumption, you predominantly hear it in a VA market, okay, or for VA loans. Now, it can be done with government loans, but I'm going to kind of push that to the side. So, I mean, you can't do it unconventional, but you can do it with government loans. But you see it more with VA loans, okay? The reason why there's always rotations going. People are staying in their home 2-3 years tops, and they're going to the next duty station, right? So let's just say, Carla, Daniel, and PCSing from, I don't know, let's just say Fort Benning, okay? And I'm coming up to Fort Campbell for my first duty station. Okay, well, Carla, you bought your house 2 years ago. You bought it for $280,000. I heard your rate was 2.5%. The rates are not even close to that. How can I assume your loan? Cool. Well, at this point, this is where the rubber meets the road, because yes, I would be assuming that 2.5%, the terms and all, right? Which is great. But Carla, are you willing to sell me your house for 280 or what you owe on it? That's going to be the biggest kicker. If you're looking to make 380 out of it, so $100K, $1,000 worth of equity that you're looking to get from selling your home, then me as the buyer, I'm going to have to make up that difference, because when you do an assumption, I'm working with your servicer, the seller's servicer. So whoever they're making their payments to, you have to talk to them, and you got to get it worked out. And that could take up to 60 days, possibly 90 days to get the ball rolling. So
what I'm hearing is basically the biggest thing for loan assumptions is that the buyer has to can take the loan over, the balance of the loan, and that existing rate for that balance of the loan, but they have to pay out of pocket for what they're selling it for. So if their balance is 280 and they're selling the house at market value at 380, then that buyer has to assume that awesome rate that has.
Yep.
You have to be able to come up with that difference of
Correct.
out of pocket, or find someone that is willing to lend them that money, or finance that money if they don't have the cash to pay out of pocket, the difference between what is owed versus what is to sell it for. That's the biggest thing, I think.
1,000%. 10,000%. You got it right. And when you really think about it in a nutshell, they're just not super common. Lenders still do it. I know quite a bit of people that I know personally that are doing it, but it's got to make sense. It's really got to make sense. So it's not just as simple as, hey, I want to assume your house, or I want to assume your loan.
Not that simple.
I wish it was that easy. There's everything always has two sides to it. So most of the time you hear the good sides to it, or the flashy sides. You never typically hear the you have to do A, B, and C. So
right. And what I'm finding too, Daniel, is that a lot of sellers are under the impression that they just assume that their loan is assumable without verifying that information with their loan processor. They don't understand. I'm finding that they have to contact their processor, which is not their original loan officer that they closed with. That's who has the loan now, who was sold to their processor. Reach out to them and get clarification on matters and confirmation that that loan is even assumable to begin with.
Correct.
Start marketing that home or thinking that you can just market to, buyers that want to assume your loan and then come to find out, oh, well, no, I didn't actually confirm that with anyone. And
Yeah, yeah, it's a big thing. It's not, again, it's not like a traditional, transaction like you and I would do. It's really, we're kind of out of the picture. But there's just got to be a lot of guidance in it. And if your circumstance fits it, then you just want to make sure you have all your ducks in a row.
yeah, for sure. It's definitely a unique circumstance.
Yep.
And okay, and then one of the last things I want to talk about before I let you go is one of my personal loan strategies, and that is the recast. So can you speak to the recast strategy?
Yeah. So a recast is essentially, I get a lot of people ask me, like, it's the same thing as a refinance. No. So, with a refinance, you're doing like a re-escrow. Typically, you're getting an appraisal done. Your term's going to change. Your interest rate's going to change. Everything's going to change on you, right? Typically, you want to do a refinance. You want a lower interest rate, cash out, things like that. A recast is essentially you're going to pick up a sum of money. It could be $5,000, $10,000, $20,000, $100,000, doesn't matter. And you want to apply it towards your principal balance, and your servicer is going to re-amortize your whole schedule. So essentially, your term's not going to change, your interest rate's not going to change. The only thing that's going to change is how much you finance, and then your payment's going to lower based on how much you want to put down. There's no appraisal fee, there's no re-escrowing, you don't have to do anything. I've had people say, hey, then what's the difference between me putting $100K down as principal balance? That's great, your payment's not going to change. It's just, instead of owing $200K, now you're only going to owe $100K. Rather than if you do a recast and you do $100K down, now you're only going to be paying on $100K, and it's going to shorten your payment, and you kind of get the best of both worlds. So you shorten your principal balance and you get a lower payment.
So it actually revises your monthly payment.
Yes.
Versus if I just, a $50,000 chunk of cash and put it towards my principal balance on my home, that's not going to change my monthly payment. Versus it's going to lower my principal, but it's not going to change my payment. And versus
Correct.
I take that same $50,000 and I do a recast, that's going to completely, like you said, re-amortize the loan and then actually bring down my monthly payment, which could be a huge benefit for some people. So if they end up selling your house in another state or anywhere, or you liquidate an investment property, or you get a promotion, or you just have a great year and have a bunch of money in savings, or get an inheritance, whatever the case might be, option to lower your monthly payment if you want to put that cash towards the recast of your loan.
Yeah, and it's a really great option because overlooked option, and I really think it can benefit a lot of people for sure.
Yeah, and interestingly, I don't think, based on conversations I've had, many people don't even know that that's an option to do the recast, and it's not doing a full refi or anything. And so I think that it's a great option for people if it makes sense, as always.
I also want to add that on a recast, it's only for special loan products. So just understand, I wish it was for government loan products as well, but it's only going to apply toward a special loan product.
Okay, thank you, Daniel, for adding that. Okay, guys, well, I'm going to wrap up this call. I don't want to make this video too long, but if you have any questions about what we talked about today, feel free to reach out to me or Daniel. Daniel, what is the best way that people can reach you?
Yeah. So I'm an open book. I tell my agents to give my cell phone number out. So that's the best way to reach me. So that number is going to be 931-538-9957. You guys are more than welcome to shoot me a text, give me a call. I'm here to answer any question you got.
Thank you so much for being here and educating our audience as usual. I really appreciate you taking time out of your day for this and being on the channel.
Yeah, I always appreciate it. Love doing business with you. Love doing these videos with you. So I'm always happy to be on at any time.
All right. Thank you so much, Daniel. And we will see you guys later. Bye.
Bye.
And today I have Daniel Page with Castle Rock. Let me do that again. Scratch that. Redo it. Hey everyone, welcome back to my channel. Your face is not ready. Your face.
I'm trying to look at something.